Most people know that donating to charity feels good, but did you know that with a little planning, it can actually cut your tax bill too? Hi, I'm Aradhana Aggarwal. I am a CPA, and my goal is simple: to help everyday people understand taxes without fear, confusion, or jargon. Today, we are diving into how to make your charitable giving not only generous but strategic, so you get the biggest tax benefit possible while supporting causes you care about. Let's start with the basics. To deduct charitable contributions, you have to itemize deductions instead of taking the standard deduction. For 2025, the standard deduction is $15,750 for single filers and $31,500 for married couples filing jointly. So if your total itemized deductions, things like mortgage interest, property taxes, medical expenses, and charitable giving don't add up to more than that, you won't see a tax benefit from your donations. That might sound discouraging, but here is where strategy comes in. Strategy number one: bunch your donations. Instead of spreading out smaller gifts every year, you can bunch 2 or 3 years worth of giving into a single year. That might push your total deductions above the standard deduction threshold for that year, meaning you get the tax break, then take the standard deduction again the following year. For example, say you give $5,000 a year to your favorite charities. By combining 3 years at once into $15,000 and adding your mortgage and property tax deductions, you could easily surpass the standard deduction and unlock significant tax savings. Strategy number two: donate appreciated assets. If you own stocks, mutual funds, or crypto that have gone up in value, consider donating those directly to a qualified charity or donor advised fund instead of selling them first. Why? You will get a deduction for the fair market value and avoid paying capital gains tax on the appreciation. That's a double benefit: lower tax now and more money going to charity rather than to the IRS. Strategy number three: use a donor advised fund. A donor advised fund, or DAF, lets you make one large charitable contribution in a single year, take the full deduction now, but spread out your actual donations to different charities over time. It's a great tool if you have a high income year like selling a business or receiving a big bonus and want to claim a deduction upfront while supporting charities gradually. Strategy number four: give through your IRA for age 70 and half plus. If you are retired, you can make a qualified charitable distribution directly from your IRA up to $100,000 per year to a qualified charity. That donation counts toward your required minimum distribution but doesn't show up as taxable income. Even if you don't itemize, QCDs give you a tax benefit by keeping that income off your return entirely. Strategy number five: keep proper documentation. For every donation, you need a written acknowledgement from the charity with their name, the date, and the amount given. For non-cash donations valued over $500, the IRS Form 8283, and if it's over $5,000, the IRS may require an appraisal. A few minutes of record keeping can protect thousands of dollars in deductions if you are ever questioned later. I also want to mention what does not qualify. Donations to individuals, crowdfunding campaigns, or political groups are not deductible. Time or volunteer hours are not deductible either. But out-of-pocket costs related to volunteering, like supplies or mileage, can be. Think of charitable tax planning as using the system the way it's designed, rewarding generosity that follows proper documentation and structure. Let's recap the keys to lowering your taxes through giving. Itemize if your deductions exceed the standard deduction. Bunch donations or use a donor advised fund in high income years. Consider donating appreciated stock instead of cash. Retirees use a qualified charitable distribution for tax free giving. Keep excellent records for every gift. Charitable giving is one of the few areas where doing something good for others also creates real financial benefits for you. With some planning, you can support your favorite causes and cut your tax bill at the same time. That's a win-win. Thanks for watching. See you next time. And don't forget to like and subscribe for more tax tips that are legal, practical, and intentional.